Good morning, everyone, and welcome to the European crossover webinar. And just bear with me one moment. And let me just go on and pull up my other page. Here we go. Okay, great. Okay, let's see, switch in right here. And we're holding pretty steady here in the euro. We've pared back a little bit, but not a lot of big difference or change in what we've seen so far. SPOOs, I'm still amazed at how well the SPOOs have continued to go on and stay up here currently right now. I mean, we actually got up as high as 32.54 here with the SPOOs. Look here. And look at over here on the cross rates also. So these yen pairs, did see the euro yen going and pair back a bit before bouncing. And coming into today, at the top of this next hour, we do have Italian consumer price consumer prices, and looking for Reuters poll of up 0.2% with HICP flash coming in at 1.3. Went over this yesterday. We do also have Eurozone retail sales also at the top of this next hour. And as we come into the States, a little bit early, though, is going to be the New Zealand dairy prices, Canadian trade balance, and also durable goods, as well as ISM non-manufacturing. That's going to be also at 10 a.m. Eastern, along with the Canadian IVPMI. And with that, we'll go on and move right on into the analysis. Okay, so the euro traded this session in a rather tight range, but that being said, it reclaimed the 1170 area. Now, as for yesterday on a closing basis, resistance will be 1223 with support at 1154. So on Friday, we had slipped past this 1170. We did go on and defend the 1123. We came back, but nonetheless, we'd closed below 1170. Yesterday, we saw a pushback and a close above, reclaiming this 1170, which opens the door for us to go on and move higher. And although we're trading a very, very quiet session overall right now, but potentially the move is that we can go on and come up to, which would be our resistance, which would be 1223. And on the downside, like I said, potentially, and actually I'd like to go and get long if we can dip down there. We're looking for a move down here. Support, it would be at 1154. See that coming right across here. Right there. And moving back to the cable. So the cable rallied back on Monday, closing above the resistance level that we had, which was 31.28. Resistance ahead is now going to be 31.95, which actually we just tagged the 31.95 and actually got a little bit above it. A daily close above 32.52, which is right up here. Okay. Daily close above 32.52 would extend a new upside leg. Support is going to be 31.02. Followed by 30.82. So we actually did hit this 30.95 right here. We did get just a bit above it, but we're actually going to go and mark that nonetheless as our resistance that we'd look for. We have gone back a little bit below that. And remember we said about the 31.29, so it was key that we got above that. If we did, and that's why we marked the asterisk because it was going to be on that closing basis. And support. We'll go right here with 31, actually right there. 31.23. 31, actually, go with the touch. It's going to be 31.16. 31.16 for support. Okay, the Aussie spent the Monday session in a quiet range at closing lower from Friday's session. Support is now going to be 69.10. You can see we just dipped below that, with a daily close below 69.14, opening a move to 68.48. Resistance would be 69.73. So you can see we've just dipped below, and that was our support level was 69.10. We're just barely just above it, but if we do get a daily close below 69.14, is going to open the door for a move down here, 68.48. We had a resistance support. We're looking at 69.10. We're just going to move that right here to this level right there. You see right there, 68.98. Actually, we just tagged that, so it's going to be right there. That's going to be our support there, right there. See right there, come across this to 68.98. And resistance right here, right there on that, where this doji is, which is going to be 69.40. We'll go with that, 69.40. Bit tight though. Okay, so it's like Kiwi closed steadily after a minor pullback. Now resistance is going to be 67.05, and support remains 66.36. So we traded. I mean, with this market or this pair after this huge run, even though it's just only been a minor pullback, and we stayed in a very tight range. I mean, yesterday we would have thought this had a lot more room to give. Let's say versus, i.e., the take a look at the Australian dollar with a lesser pullback, and look at this pullback. And I'm saying with the lesser rally, look at this pretty sizable, decent pullback here. When we look here at the Kiwi, obviously it's been a whole lot stronger, but look at this, just only a minor pullback. And even then yesterday stayed within a very tight range. So support's going to go on and remain the same here. It's 66.30. Oh, I put 36, got 34. That's fine right there. And on the upside, we said we'll go and actually put it for 67.05. Obviously still remains bullish. And take a look here with the Canadian dollar. Okay, the dollar CAD continued to weaken with the aid of the run-up in crude and also in gold. Support is 29.30, although we're certainly making a beeline for this overall target. This is followed by the interim target of 29.02, and resistance will be 30.15. Well, this market is already rather oversold, but like I said, with crude, the move up that we had seen already in crude, certainly opens the door for this to continue to move lower. And 29.02 has been the level that we're looking for overall, though it's come a lot quicker than I thought. But still, nonetheless, we're holding here, trying to hold a stand here. Now, we do have, as I mentioned, Canadian IV PMI this morning, as well as Canadian IV PMI at 10 a.m. Eastern, as well as Canadian trade balance at 8:30 Eastern. So either one of those two can easily not only take us down to the 29.30, but really make a dent and start to push closer towards this overall 29.02, which I think that we're going to ultimately get to. So the 29.30 is still going to hold, but once again, I mean, as far as our support level for today, but potentially, like I said, beyond that, we would have that 29.02. On the upside, we're actually going to go on and stay with the 30.05. We looked a little bit higher, but this thing is really hugging on to the lows and not giving much as far as, trying to pare back a bit on the upside. Simply isn't happening. Let's go on and move into the dollar peso. So the dollar peso bounced slightly off support, which was 1882, although it had dipped as low as just under 1880. But with a move back to 1887 before easing back. Let's go and pull this. Hard to see already. Look, you can see this move back up, and then we slid right back down. Support today will be 1875. And resistance at 1892. We're just dead in the water here at this lower level, and certainly looks like it does eventually want to resolve itself, which is the level we talked about since last week, 1865. That's going to coincide with 1862, which is 161% of this recent failed run. Take a look at that. There you go, right there. So I think we're going to go on and eventually make it to that area, but this market has tried to bounce, but you can see it's been all for naught. Any bounces are quickly sold into, and here we are once again at the lower levels. And let's go move into the dollar yen. And we saw this market going in pair back, and let's go on in. So dollar yen rebounded with the bounce in U.S. equities. The pair came up just a bit short of resistance at 857, which remains resistance. Support is 815, followed by 796. Well, you can see here that we took another dip back here after rebounding up here to the just almost made it up here. You can see right there at the 850 level. We actually had resistance yesterday at 857. And lo and behold, the market took another dip here. So 857 is going to be the resistance. And 825 and 815. Low so far has been 820, let's see, 825. Yeah, 825 before bounce right back. And 857 is going to be resistance. So the dollar index remains tepid with barely a bounce following the weak openings in U.S. equities, coupled with a strong move in treasuries, and that was for Monday. I mean, I would have thought, once again, to me, with the big moves that we saw, you know, the big geopolitical goings on, I would have expected at least even a temporary decent balance. We talked about that yesterday, and we simply just didn't even get it. So we're looking for resistance is going to be 96.82. With support is going to be, and once again, rather tight range, going to be 96.30. Although I think in time we will make it down here, just beyond this 96.01. Holds back a bit. And where I think eventually we'll get to is this 95.82. There you go. I think it's going to resolve itself to a break just below this 96.01. And this is what I'm looking actually for the market to get to, was we hit some stops below 96. With that, we're going to move into the cross rates. So we did get a bit of a bounce back here on Monday with the Kiwi in. Now you can see right here, you can see the resistance level we're going to be looking at right there coming across. It's going to be 72.59 on the upside. And this pair has held up, you know, even though we did go in and break the trend line here, the pair back or the pullback here has been slight in the sense that not only dipped below the 72 cents, we regained the 72 cents here. It actually closed below this, right there on the 72-cent level, came down into the new week, dipped below, tested some stops, bounced right back above it. Now it's still within a tight range overall, but nonetheless, holding up very well if you consider the run that it's had. You would expect a little bit further pullback, and at least for now, holding up well. Although we do have dairy prices this morning. If we do go on and pull back, we're looking for a move right here, which is going to be 71.29. 71.29. But at least for the meantime, support is going to be right here. Right there, 71. Let's just call it 71.79. And resistance 72.59. And you can see here with the euro yen, we did kind of get a little bit of a pullback down. Look here, down to the 21 even, and we're still trading overall in a quiet session. But you can see here on that prior daily close, this is a pretty good little strong bar here, and actually an engulfing bar, bullish engulfing. You look at it on a short-term basis, a little bit of a pop here. We actually came into some resistance. 21.33 is a 50%, but nonetheless, pretty good little pair back here. Now, that being said, obviously these yen pairs, they had already come off quite a bit. You look at that. So rather oversold, bounce back within reason. And with these equities holding up here, or U.S. equities at 32.50, you can see why we've had this bounce back. Resistance at this point would come in right there at 21. That's going with a bit higher right there. Let's call it 21.65. 21.65, which would be key today. We're a bit overdone. I'm saying we can pull back, but I'm just saying is with this bullish engulfing line here, really opens the door for it to move higher at this point. So if you're looking how much further can stretch, be looking for potentially, if it does, 21.65. If these equities, I think these equities will go and pair back before the end of the week. I still think that we'll be. I was looking for a move below 32 even on the S&Ps, but boy, they've held up. They've come back, but it's still early in the week. But I think we can slide back down. That'll open the door for these for the yen to go in and strengthen. On the support side, right there, 21.91 for a day. 21.91. Well, we did see a pretty good follow through with this euro odd. Obviously, it has a lot to do with just the weakening we've seen here in the Aussie, but we've really made the most of it. As I mentioned, we had seen that bounce back previously. We've broken right out of this area here. We added to that, and we even extended that move even further. So pretty good bounce back here with the euro odd. Now, how much further where we're looking at resistance? Well, you can see this coming right across there, which is going to be, and could easily get there today, which is going to be 62.50. And this market continues to move higher. Support's going to come in right there. 61.57. But this has been a good, strong move. Look at that. As we broke out of here, really a lot has to do with the weakness in the Aussie. I was thinking, did they just catch the market off guard? And that we, once we got this break above here, you can see this area where we were consolidating, and then we got this nice close on Friday, and then obviously Monday we took it further. But I think this is a little bit more to do with just the general Aussie weakness per se. That's not a bad move you thought about, because the euro's been holding up overall, and then you compare that or you couple that with the Aussie weakness, and boy, I guess you had the setup for probably a decent little pullback, which we've seen, but probably more than what I would have even expected nonetheless. But nice move here on that. Let's go move into the Euro Kiwi. Well, slight improvement here with the Euro Kiwi. Nothing compared to, as I mentioned, like the Euro Aussie, but certainly working a little bit higher. Steps are rather small here. Resistance is going to come in right there. You can see that coming across this level right there, which is going to be 68.58. And we're actually going to change the euro now to bullish. The key will be actually if we can get a daily close above 68.38, we'll put the bulls in a little bit better situation. But we need a daily close above 68.38, although resistance is going to come in at 68.58. Support's going to come in right there on this close on Friday, which is 67.38. Now the ASEAN is just hugging here at this trend line, actually hugging here at what we had for support. Remember, we had that 74.58, which was going to come in right where that trend line was at. And that's going to remain support here. We're hanging on here, but we're going to stick with that 74.58. It certainly looks like it could break a little bit lower, but we'll stick with that. Right there with the trend line just below the 74.73, and we're going to put it right there for 74.58 for support right there. You see that? Resistance we had for 75.32. I think we can tighten that up a bit. Right there. 75.20. 75.20 on resistance. And let's go move on to the guppy. Well, we've seen a decent little pullback here. Resistance is going to come in right there at 43.15. 43.15 on the upside. We actually went already just above that already, but it's going to be, we'll call it right there. Do you see this level right here, confluence in here, and also this high right there? You see that? I'm going to call that 43.21. And if you look at this one also just barely, but nonetheless still engulfed. You see that? The body. While we're seeing this follow through. And support. Going to be right there. 42.50. And let's go move into the sterling odd. Well, we've certainly seen a pretty good rebound here. Not only has sterling held up very well, but also and couple that with the weakness in odd and recipe for obviously a move higher. We're going to take a look at it on a fib. There we go. So 91.87 is going to be the 78%. And you can also see this coming right across right here. We're actually going to move it just a bit higher right there. So 91, we're going to have 91.90 for resistance. Although we've already had a pretty good little run already, but we'll go with that. 91.90. And for support, and let's go and mark that off, actually. And for support, let's take a look here. And I haven't updated this as clearly because, as you can see here, I started to move to a different provider now with Ninja because of the problems I've had from time to time with TradingView. So let me go on and it's been frustrating. And let's take a look here. I'm not sure if I want to put it that high. Let's go with that. 90 right there. 90.67. 90.67. Still a bit on the strong side. I mean, considering the big move we've already had, but there's a lot of good volume trading here. Still like to pull it back a bit more. So let's go right there. 90.57. 90.57 for support. Let's go and go back into the main screen. Euro still trading. I mean, it's holding up, but trading in a very quiet session. Dolly in after a bit of a dip has popped right back up. Peso, everything's relatively quiet. The one mover is the sterling pairs. Obviously, we've already had a move in the yen pairs, but well, to me, it's a bit surprising. There's some resistance coming right there, 32.53. A bit surprising that although we have pared back a bit from that 32.53. I think try to remember who mentioned. I think it was Glenn in the chat room who had mentioned also he had some confluence there at 32.53 in the spruce. But look at that, considering the pullback we've seen. But to me, I think that the newfound shorts that are down here in the 32 teens and 32 20s are the ones being held hostage. Although I would expect this to start to go and pare back. And it wouldn't surprise me, as I mentioned, as we get towards the end of the week if we haven't paired back below 32. Seems a bit far-fetched at this point, especially I would have thought we would have held in here, you see, and then start to roll over, and still they kept the pressure up. But once again, I would think that considering the risk going forward, I think that we would go and start to go and pair back on this, but still, nonetheless, certainly has allowed the yen pairs to go on and bounce back. Here, let me move this out of the way. And gold continues to remain fairly strong here. I think Blake said it best in the face webinars. You really just want to be buying this thing on dips. If you slide in on it, I mean, you could, scalp it to the short side and only intraday. And make sure you have a stop in place because, like I said, it only takes one event here, and boy, this thing will be up in your grill like nobody's business. Probably the safer bet would actually be just to go in and buy this thing on dips. I think even playing it from a short side, and there's some good areas here, but if something comes up, boy, it will turn on you so fast it won't be funny. Excuse me. And lastly, here in crude, we have come off a bit, but not as much as you would actually expect. I mean, already had a pretty good solid run here and certainly has aided and abetted the dollar CAD weakening. I'm surprised the Canadian currency isn't even stronger than it already is. But certainly we'll need these equity indexes to go on and slide back a little bit to get these yen pairs in check. But that's all we have for today. Thanks for joining us here on the crossover, European crossover. And we'll go on and see you in the chat room.